Can your tenant pay your mortgage? Imagine buying a house and then having someone else help pay the mortgage every month. Sounds impossible? It isn't. This is one of the basic ideas behind rental real estate. You buy a property using some of your own money and a mortgage from a bank. Then you rent that property to a tenant. The tenant pays rent every month, and that rental income can help cover the property's mortgage and other expenses. But here's the part most people don't understand. Rent does not automatically equal profit. There are taxes, insurance, maintenance, repairs, vacancies, and other costs. So the real question isn't, can my tenant pay my mortgage? It's, can I buy a property where the numbers actually work? Let's break it down. Imagine you find a rental property worth $300,000. You don't necessarily need $300,000 sitting in your bank account. Depending on your financing and situation, you may make a down payment and borrow the rest through a mortgage. Now you own the property, but you also have a monthly mortgage payment. So you find a tenant. Maybe that tenant pays you $2,000 a month in rent. And imagine your mortgage payment is around $1,700. At first, it looks amazing. You might think, I'm collecting $2,000 and paying the bank $1,700. That's $300 profit every month. But stop. That calculation is incomplete. The mortgage isn't the only cost of owning a rental property. You may have property taxes, insurance, maintenance, repairs, property management, and sometimes no tenant at all. Imagine your tenant moves out. Your rental income becomes zero. But does your mortgage payment become zero? No. The bank still expects its payment. That's why experienced investors don't simply ask how much rent a property can generate. They calculate the property's total expenses. For example, if a property generates $2,000 in rent, but the mortgage, taxes, insurance, maintenance, vacancy reserves, and management costs add up to $1,900, your actual cash flow is only $100. And if an unexpected repair costs $2,000, that $100 monthly profit disappears very quickly. This is why the phrase, "the tenant pays your mortgage," can be misleading. The tenant provides the rental income, but the owner still carries the risk. And there's another important part of the story. Your mortgage payment isn't always just money disappearing into the bank. Part of the payment can go toward reducing the principal balance of the loan. As that balance falls, your equity in the property can increase. So a rental property can potentially create wealth in several different ways. There can be cash flow if the income exceeds the expenses. There can be loan paydown as the mortgage balance decreases. And there can be appreciation if the property's market value increases over time. But appreciation is never guaranteed. Property prices can fall. Rent can decrease. Interest rates can change. And a property can sit empty. That's why buying any house and simply hoping the rent will cover the mortgage is a terrible strategy. The purchase price matters, the financing matters, the location matters, the rent matters, and the expenses matter. The goal isn't to find the most expensive house you can qualify for. It's to find a property where the entire financial equation makes sense. So, can you really buy a house and have the tenant help pay for it? Yes, but it's not free money. You're the one putting money down. You're the one taking the mortgage. You're the one responsible when something breaks. And you're the one who has to keep making payments when the property is empty. The tenant provides the income, but you provide the capital, take the risk, and own the asset. And that's what makes rental real estate so powerful. You're not simply trying to collect rent. You're trying to turn a property into a long-term wealth-building asset. Because the real strategy isn't make the tenant pay your mortgage. It's buy the right property, manage the numbers, control the risk, and let the property work for you over time.